Kuzangpo. Welcome to Bhutan e-learning project. This lesson is accounting theory for Key Stage 5, classes 11 to 12. At the end of this lesson, we should be able to fulfill the following objectives. Number 1, identify different financial statement users and its components. Number 2, identify accounting information users or stakeholders. Number 3, explain why they use accounting information. Number 4, explain assumption in preparing financial statements. I repeat, at the end of this lesson, we should be able to, number 1, identify different financial statements and its components. Identify accounting information users or stakeholders. Number 3, explain why they use accounting information. Number 4, explain assumption in preparing financial statements. This lesson talks about the financial statement which are prepared for general purpose. There can be some financial statements prepared for a specific purpose. However, we shall only study general purpose financial statements. The objective of the financial accounting is to communicate in true and fair manner the performance and the financial position of business to a wide range of information users. In order to know how these financial statements are used by the users, we have to know what are the financial statements and what consist of financial statements. Financial statements consist of A, statement of financial position, B, statement of income, C, statement of cash flows, D, statement of change in equity, E, notes to statements. I repeat, financial statements consist of 5 things. First one, statement of financial position. Second, statement of income. Third, statement of cash flows. Fourth, statement of change in equity. And last, notes to statement. This is sample of statement of financial position. The top part, Plastic Tire Corporation, is the name of the company. Statement of financial position is the name of the statement given, and as at 31st December 2019 is date on which this statement of financial position is prepared. Previously, we used to call this as balance sheet. However, as per the BAS or International Financial Reporting Standard, we name it as statement of financial position. In the statement of financial position, we prepare by first recording assets. Assets are also again categorized into current assets and non-current assets. Likewise, then we record liabilities. Liabilities are also similarly categorized into current liabilities and non-current liabilities. However, the presentation of these statements differ from companies to companies. If you look at the statement of Bank of Bhutan, they begin with current assets and then they go for non-current assets. So in the statement of financial position, you must note that the total of assets and total of liabilities are always equal. B, statement of income. Similarly, statement of income also should be beginning with the name of the company, name of the statement, and for the year which it is being prepared for. Statement of income is also, in other words, called as profit and loss account. It represents results of operating of business for a period of time. Business performance is measured often by profit earned. If you look at the sample given here, you can note that the revenues and gains are on the top. From the revenues and gains, which are all aggregated, then we subtract all the expenses and losses of the company. So when you subtract all the losses and expenses of the companies from the revenues and gains, you get a result either profit or loss. If you get profit, it is called as net income. If you get losses, it is called as net loss. However, in the sample, we have a net income. This profit and loss is calculated as the difference between income and expenses when matching concept is applied. Meaning, if you make a revenue of 100, to make that revenue of 100, how many expenditures are incurred by you should be deducted. So that applies the concept of matching principle here. So it says profit is always income minus expenses. Next one is the statement of cash flows. This is sample of statement of cash flows. In the statement of cash flows, it provides the details of cash received and cash paid during the accounting period. It classifies and presents cash flows from operating, investing and financing activities of the business. Statement of cash flows provide basis to assess the ability of the entity to generate cash and cash equivalents and the needs of entity to utilize those cash flows. So if you look at the sample, it begins with the operating cash flow, and then we have cash from investing activities, and then we have cash from financing activities. At the end, we will see if there is cash inflows or outflows. And we see here in this case, we have a free cash flow of 10,971. Next one is statement of change in equity. Again, this is sample of statement of change in equity for the year ended 31st December 2019. It is the statement for Bhutan Marbles Corporation Limited. Statement of change in equity begins, it has three components to do with basically. Share capital will be there, retained earning will be there, and then total equity will be there. And then the balances of the beginning will be brought here, and then we add up and subtract net incomes and losses, and then we try to subtract dividends and then try to get the final equity and retained earning of the company in this statement. This statement presents the movement in the owner's equity during a period of time. It traces all the changes resulting in such as share capital, share premium, and different classes of reserves. Last one is the notes to financial statements. The last one is the notes to financial statements. If you look and study the annual report of any company, you can come across the notes. This note presents information about the basis of preparation of financial statement and specific accounting policies used in preparation of financial statements. It also discloses the information required by accounting standards that is not presented elsewhere in the financial statement. The format and the contents of financial statements are specified in a company law. The amount of information to be disclosed in financial statements has grown over the years due to change in legislation and the demand of the information users. For example, disclosures on the company's directors' remuneration, political donations, transactions between companies and its related parties are increasingly becoming important. Now we have learned components of all the financial statements. Let's see if the knowledge that we have gained so far, we will use this knowledge and then try to see if this knowledge can be applied to identify the different types of financial statements. This is question to the learners here. Let us identify this one first. Which statement is this? Which statement is this? it has a share capital, it has a retained earning, it has a total equity, it talks about opening balance of equities and closing balance of equities, it talks about returns on the returns on the share capital. What is this? Which statement is this? This is statement of changes in equity. Correct, you're right. This is statement of change in equity. Which statement is this? Look properly. Study all the components of this statement. If you look at the statement, you can see cash from operating activities, cash from financing activities, cash from investing activities. You have cash flows. Which statement is this? Okay, this is statement of cash flows. Good. This is statement of cash flows. Which statement is this? Revenue and other incomes are given, all the costs and expenses are deducted, and you arrived at net income after deducting all the expenses and losses. So your answer is net income here. So which statement is this? This is statement of income. Correct. This is statement of income. Which statement is this? Look, you are given information about for the year 2018, 17 and 16. For the past 3 years, your information is ready on the assets, on the liabilities, on the shareholders' equity are disclosed in this statement. So which statement is this? This is statement of financial position. This is statement of financial position. Correct. Which statement is this? It talks about offsetting financial instrument, cash and cash equivalents, trade receivables, trade and other payables, earning per share, which is included in the financial statements, and then it is disclosed somewhere else in the form of notes. This is called statement, notes to statement. This is notes to statement. Correct. This is notes to statement. Okay, now you have good knowledge or a fair knowledge about what are different types of financial statements, right? You have good knowledge of what are different types of financial statements, how you are going to classify it, and how you are going to name it, what are the different financial statements, what are the names of each financial statements. You're clear with this one, right? Okay, students, you have now one question. Explore annual report of Bank of Bhutan Limited and Dungsam Cement Corporation Limited and see how the statement of financial position of these two companies differ. I repeat the question. Explore annual report of Bank of Bhutan Limited and Dungsam Cement Corporation Limited and see how the statement of financial position of these two companies differ, because one is a financial institution, other one is a manufacturing company. So you can enjoy reading these statements from their websites and then try to find how the statement of these two statement of these two companies differ in writing their financial statement of financial position. Now, second part is users of accounting information. Information users of a business are often known as stakeholders. The stakeholders are defined as parties who have a legitimate claim for information from the business entities. However, users do not have that one. General users do not have that legitimate claim for the information from the business entities. The stakeholders do have. Students, you understand that here two terms, stakeholders and the users, are a little bit different. Users can be anyone, but the stakeholders are the one who has legitimate claim for information from the business entities. Here we are going to study in a general form. We are going to use stakeholders as well as users of accounting information, and this include one, broadly, internal users. What consists of internal users, or who consists of internal users of accounting information? One, it is the management, the Department of Finance. They use this accounting information. Example, let's say, is the cash sufficient to pay dividends to Microsoft shareholders are decided by the finance department of a company. This finance department decides all these things by studying the financial statements of a company. Next one, let's say PepsiCo company is producing two different types of products. Now they want to see which product is not doing well. If you want to see which product is not doing well, definitely it says which product is bringing less revenue. And then this kind of decisions, should you continue with production of the product that brings less revenue to your company, it's a big question. And these decisions are made by business management, and they are internal users of the accounting information, and then they get all those knowledge to make decision from the statement of financial position. Next one is marketing. Again, marketing department of a company have to decide on pricing of the products. At what price should the product be sold? And these all decisions are made by studying the financial position of the company. Other one, very important, is the human resource department in any organization. They have employees. Employees are interested in knowing whether they will get salary for next month, whether there will be increase in the pay, whether they are going to get bonuses. These informations are all present, or they derive this kind of information from the financial statement of financial position, statement of income, and other accounting statements. Second one, the second category of accounting information users are external users or external accounting information users. Who are external accounting information users? Let's say first one, the potential investors. Potential investor meaning people who have a lot of money and they want to invest in business. Now, if they want to invest in a business, they have to know whether there will be earnings in the future. If they invest 100 today, will they get 110 at the end of 1 month or 110 at the end of second month? So this is the decision that an investor has to take. Example, is General Electric earning satisfactory income? See this question, is General Electric earning satisfactory income? For this question, you get answer from the statement of income of any business. So therefore, see, investor use the income statement to analyze the performance of the business, and then accordingly they will decide whether to invest or not to invest in this kind of companies. Next one is the creditors. See, example, will United Airlines be able to pay its debt as they come due, meaning creditors, they always supply goods to the business on credit basis, and then if they keep on supplying goods on credit to the companies, and then if companies are not able to pay back to the creditors, then they are going to suffer a loss. So this kind of decisions, creditors will take decision by studying the financial statements of the companies and then see the ability of a company to pay back its creditor, and then accordingly they will lend money to the companies. Third one is suppliers. Now, suppliers are the raw material suppliers to the business entities, and then most probably they may supply on credit to these manufacturing companies, and they have to see now if that manufacturing company is doing well or not. How do you know whether the manufacturing company to whom you supply raw materials is doing good? It's by studying the financial statement of that company. And then suppliers will see if that company is not earning a good profit, and if it is not profitable in the future too, probably supplier may stop supplying raw material today. Next accounting information users is government. Why do government use accounting information? because the main revenue to the government is in the form of tax also. One resource to the government's revenue is tax on the companies. So in order to see how much tax you are going to earn, the government also has to study the financial position of the companies and then evaluate on how much tax they can collect from the companies. So they are external users. Last one, assumptions in preparing financial statement. Preparation and presentation of financial statement is based on the following assumption. One, separate business entity. Here it's simple, the owner and the business should be separated. They are two different people, they cannot be considered as one. The accounts of the proprietor should be maintained separately and the accounts of the business should be maintained separately, because the accounting equation says assets is always equals to liabilities plus owner's equity. Asset is economic resources and the liabilities plus owner's equity is a claim on owner's resources. This clearly indicate the proprietor and the business is a separate entity. You cannot mix them up. So one assumption, fundamental assumption, is separate business entity. Second one, going concern. Going concern, here we say that the business entity will continue its operation for a foreseeable future. It means there is no intention or a necessity to close down or significantly cut down the scale of its operation. It is because of this assumption that non-current assets are reported at the net depreciated historical cost, even if its realizable value is lower, since we expect that the asset will continue to be in use in future. B. Assets and liabilities are categorized as current and non-current, and the business entity will continue to trade. The going concern of a business entity must be assessed from time to time. When there is a going concern issue, or when there is a question on going concern of a financial institution or any companies, then the financial statement are prepared under realization method, where it is expected that assets are disposed of, meaning assets should be sold off, and whatever you get from the process of sale, it should be used to pay off the debts and the liabilities of the firm. Money measurement. It is assumed that every item that needs to be accounted can be measured in terms of money or money's worth. Business entity cannot say they have 5 buildings, 7 acres of land. We use our national currency, Nultrum, as a unit of measurement of transactions and events. The Nultrum is also used as a unit of accounting and for financial reporting. The particular currency which is used to account for business transactions and events is called functional currency. The currency which is used to prepare financial statements and reporting of entities' financial result is called as functional currency. This is possible only in the books of multinational companies. Now, this is the end of the lesson. Before you switch off to other subjects, please carry on these activities. Activity 1. Describe how accounting information helps shareholders and the lenders to make decisions concerning the operation and performance of the business entity. Try to find out some other uses of accounting information which are not listed in this lesson. Evaluate for which purpose accounting information is being used by the listed users of accounting information. Thank you for attending this lesson. I will see you in my next lesson.